just record this part as well so I can sort of explain to you what was in my head while, you know, I was looking at these trades now. The USD Jappy, right? Um, which, the signal was for me to buy here when I got this engulfing candle, which is what I'm going to talk to you about, right? But then I look at the USD Jappy, but also I saw a trade on the DAX as well. Because if I make this a bit bigger, at this zone, right, I got a really beautiful pin bar, which I set up. I set up this trade from last week, right, from over the weekend. So I said if it comes down to this zone here, so this is going to be, it's into this range, and then this is my range bound buy trade, okay? So I've set up this thing and I got this signal, put my entry there and I got triggered into it, okay? But if I then show you another why I got this signal here, which I was going to take this one, which I was going to take there, and also this one, so these two. So the DAX 30. So if I go into my FX book, right? Because for all of these trades, before I actually take them, right, I basically I go to mine because I've got a smaller number of markets that I'm trading now, and I look at this one and the German 30, and they are what? They are 82% correlation. So then is either I'm going to risk half on this one and half on that one, but I couldn't take both of them at the same time. Okay? So what I end up doing is for all the trades that I looked at this one and said no. But if you look at all the others, they're very weak correlation apart from this one. But because the market was way off this one, because when I compared this one with the Euro GBP, it's way off because they're moving opposite direction. So this one go down, that one is going to go up, which that's what you see if you look at the Euro and the GBP, right? The Euro GBP. So the Euro GBP, right? This one here, this one is going down, but then look at what the GBP Swiss franc, that one is going up. So they move in the reverse direction. Okay. So I'm just showing you how I'm using the correlation to make sure that I don't sort of go and buy into the same trade twice. Okay, so I've got the USD CAD. I've got, this is a setup. It didn't trigger at all. I was expecting it to pull back here for me to buy there. Okay, but now what I'm waiting for is for the market to pull back down to here before I consider doing any buying. But all of these strategies I'm going to be teaching you, that would have been a nice one for me to get into. Oh, this one now, I got this pull down to here, pull back to here. So I got my range because it's just within this range. So this is a nice trade, yeah. So my target on this trade is 238 pounds. I was risking 130 odd pounds, but at the moment I'm up just 95 pounds on this one. Okay. This one, I was into this trade, got stopped out there. I entered there. I was up roughly nearly 100 pounds up to there. I moved my stop loss up to there, and the market came back and stopped me out. But if I get the right signal here again, then I'll take the trade because I've noticed that it's just in a range here. Okay. Coffee. I'm looking to get into coffee there. Copper. Well, copper basically gave me this signal here, which I was looking for. So I'm looking for copper. Looking for copper, but at the moment, because of the sanction between Donald Trump and China has a lot to do with this copper industry, and I think what happened here, the market came and flushed out a lot of these people, and because Donald Trump, right, and China seems like they're gonna have some sort of talk about what's happening. So as a result, it sort of give copper here a bit of strength. Now remember, as I said, I'm not trading using an indicator. This is one of the thing I'm going to be teaching you tonight, right? One of the things I'm going to be teaching you tonight. So I'm using the chart totally. I was into this trade. I made money all the way down to here, right? Now I'm looking to make money going back in the opposite direction, okay? Now here now, I've got my signal. This was, set up from over the weekend. Got the trade, took the trade. That's it. Okay. And when I look at my correlation, this one here, you see here now, I was looking for this to happen for the market to break, but I think this would have been a more riskier trade because you can clearly see that this market is in an uptrend. Okay. But then the market then pulled back down to this zone here. Okay. So that's where I would be willing to buy now. Um, S&P 500, if this market pulls down to this zone, then I'm very much interested. The Nasdaq, if it comes down to this zone, then I'm very much interested. So all I'm doing is just waiting patiently. Okay. This one I was triggered into. Okay, and it's just basically the strategy I use. I'm not doing anything else. And this one, I was just showing someone about this one. Okay. Now that's just so you can see real live trades and see how it works. Okay. Now and also why I've actually used the correlation just to sort of help me out there. And also when I saw a trade set up on this one, that was 60%. That one with this one was also 64%. So I decided that I wasn't going to take so many doubling up on my account. Okay. For the homework, what I was expecting everyone to complete the homework by the deadline. Now, at the moment, it's very difficult for me to sort a mark in the week with other commitments. So Sunday is when I do all the marking of the homework. However, you won't have a lesson next week, so therefore you'll have, you don't have to give me this one for Sunday. You can give this one, for this one. You've got until next week. No, not next week. Next week's, I would say, the following week. No, I can't leave it too long because if I leave it too long, people, won't do it. If I say the deadline is for next week Saturday, okay? So if I leave the homework for next week Saturday, um um there was a question here about does the correlation oh often, okay, right, okay, there's a few questions here. So you're buying the demand zones, yeah, we're buying selling the demand zones. Okay, how much did you buy it for? Okay, right, okay, you're buying the demand zone. Yes, that would do, buying the demand zone and selling supply zones. How often do you buy? We buy when we get a trade set up. Some markets, on my last week I got only two trades. So it all depends, but you've got to be very patient. Does the correlation change? Well, the correlation, it probably take months, for the correlation really to change, or for it to change drastically. However, you might have, the Russia government say they're going to bomb the UK or annihilate them or something to that effect, and then that can just throw the correlation. So of course the correlation can change. But then, as I said, we will see it in the chart because the price tells us everything. These candles will tell us everything that's happening. Okay? And at the different zones, it's even more powerful. Okay. Any more questions? Okay. Right. So if we say then the homework is due for next week, next week, next week Saturday. So at least it's easy for everyone to get it done. And because this week's work will be a lot. Um, you know, because what I'm going to be teaching you today is about backtesting and how we go about backtesting to make sure that the strategy that I'm teaching you and everything actually works. Yeah. So that's what we're going to do really. Okay. So let's have a look and see what this is about. Now, also the people who have actually sent, because a number of people have sent me some updated homework that they had in the past that they've just sort of finished, so they can now get up to speed. I will mark those next week because next week I'll be on half term and so on. So I'll find some time and I'll be able to mark them for you. But what I'm going to be asking though is that you don't um, you don't let the homework get caught up on you because we've got 17 sessions, right? Yeah. Now in May, right? I think it's the first week of May. I think I'm not sure. I'll tell you exactly. That's the time when I'm going to be having a consultation about your trading plan, where I'm going to have a one-to-one discussion with everyone in the group and looking at your trading plan, a one-to-one lesson like what we're doing here now, and just to sort of polish off and get everything shiny and ready and rosy, right? So we're going to be having a 1 hour session where we just talk about everything about the trading plan to make sure that you've got your strategies, almost like you'll have the template and you just need to fill the stuff in because it's about mental discipline. It's about understanding yourself. It's about knowing how to sort of operate. So in May, there is when I'm going to have that one-to-one session with everyone. Okay. Right. So please, I'm asking you to try and keep on top of the exams and sorry, not exam. Try and keep on top of all the homework that I'm setting. Okay. Now we looked at this last week. We discussed we select markets to trade. Now everyone so far, has really sent in a lot of good stuff. A lot of good stuff about the markets, what moved the markets. I like, a lot of the stuff I saw, but I think that was only from 4 people, and I really wanted to see everyone sending me their homework. Because guys, if you do your homework, right, then it gives me a lot of incentive, makes me feel motivated. And of course, you're paying me for it, but I've got this burning desire to help people to become successful at trading. While I'm on my own personal journeys in other areas as well. Now, if you are doing well, then of course, it's going to send that positive message in my head. That's going to encourage me to want to make sure that the feedback I give to you is quality. I can spend that time. But then if I look and I see only 3 homework comes in, you know, it's really painful. Okay. Um, why build why to build a relationship? We spoke about the relationship. So is it the fact that now you are getting to understand these markets? I know these markets operate, right? Then it's just going to give you that added bonus. For example, you might hear that the Dow Jones in America sold off, but then the markets that you are looking at, the markets that you are following, you realize that one market out of all of those markets sold off the day when the Dow Jones sold off. So then you are then building that relationship. You are then understanding about that market and the correlation. And that's then lead us into now the next lesson, which is lesson 4. Okay. Now for lesson 4, which is discuss the selected markets. Now I love the markets that people have chosen. And even if you notice here, guys, even when I was taking my trade as well, right, I was still looking and I'm saying, okay, if you have more than 10 markets, then it's going to be difficult for you to fit all of them. So I think 6, and one person in the group has got 7. That's fine. Okay, but all you've got to do is make sure that, for example, if I was to take this one and this one at the same time, then I know I'm doubling up on the trade. This one and this one, I know I'm doubling up on the trade. So just forget it, Marlon. So that's what I had to tell myself. And then you just be disciplined. Or, as I said, you put £50 for this one here. Say your risk is £500 for the trade. So you would put £250 in the the German 30, and then you would put £250 on that one if your total risk is £500. Okay. Now the next bit we're looking at now is what is meant by pip and a point. Okay. Now if we look at this thing right now, if I make this thing bigger, because Now, this thing here, right? If we look at this now, what I'm gonna do, I'm just gonna show you a few things because I've got this thing here, and if I was to buy this thing, let's put it at let's put it at 1 so you can see. If I click on buy, let me just check if it's this my demo account. Guys, also if you've got, because I've got a few students who have got demo and they've also got the real account. Always check, guys, because you will press, because you know this bit, this is £10 a point. So for every move, if this, so let me show you what I'm talking about. Right. I'm just gonna turn this off for me. And also as well, guys, if you say, for example, on the demo, if you click on the demo and you get this and you get the trade that's click at the same time, then basically I want you to go into this. Let me show you. Remember, I'm recording, so you'll be able to see anyway. So if we go into tools, we go into options, and then if I go into trade, right? And then if we click on one-click trading, okay. Then let me just show you here the terminal, yeah, this terminal here, and if I go into trade, okay. This is my demo, okay. Right, so if I go into this and then I click on buy, can you see there? Yeah. Now also, this is USD CAD. Now, this bit here is what we call, we divide this by 10, okay? And this is what we call, this is the spread. This is what we're gonna pay the person to get into this trade. But you see, let's look at what we call now. So this is the spread. So I enter straight into the market, right? If you notice, let's cancel that. So if I click on buy, that's what we pay to get into this trade. We pay them £7, okay? Yeah. Now to get into this trade, and if you look at the spread, yeah, if you look at the spread, but see now, the market is going up. So when the market is going up, that's when you're gonna start making a profit. But if the market is going down, then that's when you're gonna be losing money. Okay. Now this bit here is what we call the spread. If you right click on the MT4, right, you've got the spread there. Now that's what you're paying, right, to this broker to get into this trade really. Now to close the trade, I just click on the X there. Okay. Now, so what we've got now is this. We've got it's 1.29245, 1.2941. Now, this platform works on 4 decimal places and 4 decimal places, right? So if I was to do from 2922 and 2923, right? Let me just write it on here and show you. And just take this as well. Okay, and then if I then show you something here now. Let's take this one here. Okay, so this is what I've got here now. Now the USD CAD, right? For me to get into this trade, right? Now what we're looking at is this decimal place here. So that's 9, and this one is okay. So that's 2. Okay, let's look 2919. Okay, and then this one is, forget about the first digit because that one is not significant. Okay, then we've got 2 9 2 1. Okay, let's put the 1 in anyway. 1 point. Okay, now if I take them away now, okay, so scrub this out for now. If I take them away now, so if I do 9 from 1, we can't borrow 1. You can use a calculator, but I'm just going to do it here. So get 1 there and then put the 1 there. So 9 from 11 is 2. Okay, 1 from 1, leave it with 0. 9 from 9, leave it with 0. 2 from 2, leave it with 0. And 1 from 1, leave it with 0. That is the spread. That's how much we're going to pay. Okay, that's how much we're going to pay. That's the difference. Okay, so it's what we call 2 pip spread. Okay, now if you look, right, we're going to look at a different one now because we're looking at this pip and this spread business here. Now let's look at a different market now, and if you notice, these are like our say for example our major markets. Okay, so what we're going to now look at, we're now going to look at one of the exotics, right? So let's see one of the exotics here. Like we've got uh, let's look and just take off the show. Now what I'm going to do, I'm going to right click and I'm going to show you the spread. There's a spread. Look at this one here. Okay, so I'm going to take this one off. If you notice, it's showing there. Okay, 44.9 there. So let's take the euro ruble. Okay, so let's have a look at this one now. So this one here, okay. So we've got basically the. Let me just show you something here, guys. This is the bid, and that's the ask, right? And the it's almost like you've got the buy, and you've got the sell. Okay. So let's look at, this is the USD CAD. There it is there if you look. That one is 2927, yeah? And then this one is 2921. So the bid is what if you sell it, that's what you're going to pay. The buy, which is the ask, is what you're going to pay if you buy. So the buy is normally higher because there's a gap between the two because you expect to pay the spread because that's what they earn. But let's actually work it out now because I'm going to talk to you, apart from the spread, I'm going to talk to you about this pip or points, okay? So let's see what we get here. So we're going to have now 71.0371. And we've got 70.9922, right? And I'm going to take them away, okay? So we get 2 from that. We get, and make sure you use a calculator, guys, because, you know, we haven't got time for these sort of calculation. Let the your 6 and 7s and 8s, they need to do these things. We just use a calculator. So 2 from that, I get 9, right? Okay, and then 2 from 6, I get 4. Then 9 from 3, I can't, so I'm going to go and borrow 1 from here, which I'm borrowing, like, you know. Then put my 1 there, that becomes 10. That becomes, 9, put the 1 there. So they get 9 from 13 is 4. And then this from 9 is 0. And then we get 0 from 0, 0. And 7 from 7, 0. So if you notice, this is exactly the same as that. Because there's this spread between, this is what you pay. Now, in order, because this is, for this one, in this case, we're looking at, right, it's basically, we divide each of these spread by 10, and that will tell us how many pip. Now, what is a pip? Okay. Now, this word pip, okay, or pips, and we've got the points. Okay, same thing. I'm going to explain that now. Okay. Now, if the market is at 70.992, yeah. Now, let's leave the last decimal point because this one is 3 decimal places we're using, yeah. Now, the last, this one here is 2, right? Now, if this market then move, you know what? Okay, now if this market then move to 70.991, this has actually moved 1 pip lower. So say for example, if when I enter this trade at this, and we already pay for the spread, right? So we pay for the spread already, and now this is where we start, right? And we put a pound for every movement, right? This thing moved from 992 to 991, okay? this now would be, in my account would be down by £1 because this moved from 2 down to 1, from 992 to 991. Okay. Now if the market then moves, yeah, and remember, this is if we're buying. If we bought, but this thing was going down. So if we think that this market was going to go up, but this market is going down, yeah, so the market is now 9, 8, 5. Okay. So is the market going down or going up? Okay. So, um, so let me just ask now because I'm going to be asking now because I love interacting with my students now. Taliba, can you hear me? Taliba, Taliba. Okay, right. Patrick, can you hear me? Patrick. Okay.
Hello.
Yeah, hello. Right. Yeah. Okay. Now,
Right.
my question here is this, right? Is this one going up or down?
It's going down.
It's going down. Now, we have moved now from 991 to 985. So what's going to happen there is that it moves 990, 989, 980, and 7, 86, 85. So how many pips would it move then?
7 pips.
Okay, so let's check then. So we move 1 to get to 90, then another 1 to get to 89, then another 1 to get to 88, yeah? Then another 1 to get to 87, okay? Then another 1 to get to 86, yeah? And then another 1 to get to 85. So we get 5, right? So we get 6. So this thing would have moved 6 pips. So if you're doing a point from here and it moved to there, then we're looking at £6 down already. Okay? So, and guys, remember, with this thing, there's no need to worry about this maths business because all I need to do is to do this, right? Okay? There's no need for us to do, even if you haven't got a calculator at home, you just need to do this, okay? It's online calculator. Okay, and then if I do this now, okay, and then you can actually see I've got that there. So all I would have to do now, then I just go on to go 70, okay, point, 991, take away, yeah, 70 point, yeah, 985, right? And then I'm getting my 6 pips, okay? So I don't need any sophisticated calculations here. I just bang it into my calculator and I'm done. Okay. Now, so if we then go back to this now, where we're looking, if we see something looking like 44, it doesn't matter how nice this market looks, there's a spread of 44 pips. Okay. You don't want to be paying the market already 44. If you're doing a point, you'd have been down £44 already. This one would have been down. And remember, for all of the examples I'm going to be doing tonight, we're doing a point, okay? Now, what I'm going to do now, because I'm going to be talking about the spread, but this spread here will tell me the pips. Okay, so in this case, that's 16 pip at the moment. That's 11.9 pip. So all of these, we divide them by 10. Okay? So we're going to divide these by 10. Now, if I've got 44, if I divide it by 10, you just put a point there. Now, this one is 444. That becomes 44.4. If this is 71, that becomes 70.3. Okay? Because we need to understand the spread. So therefore, if you go and see a nice trade setup on this Norwegian krone and Japanese yen, No matter that setup is brilliant and beautiful, just forget it. And that's the reason why we don't really trade the exotics because the spreads are too large. Okay? Now, um, next thing now, let me see now. Tila, Tila.
Hello.
Yeah, hello, Tila. Good evening. Right here we've got the spread, right?
Yeah.
Okay, so what I want you to do is to tell me how many pip spread is this one? At the moment, just give me a snapshot because remember it's moving up and down, yeah?
1.4,
Yeah,
1.3,
yeah. What's this one?
6.7,
This one?
4.3,
So if this thing was going up and we bet that it was going to go up, and at this point we had moved four of this up, how much money would that be? Would be up?
£4,
Yeah,
40 pence,
excellent, well done. And what's the spread on this one?
1.4.
Okay, so if I was to go into this trade, right, and I was doing a pound a point, how much money I would pay to the broker to take this trade for this one here?
Um, £1, 40 something pence.
Well, this one would be £1.20 at the moment, or £1.30, yeah? How much would I pay the broker for this one?
£4,
How much would I pay him for this one?
4.30,
How much would I pay for this one?
4.40,
This one?
3.70,
How much should I pay for this one?
£43.70.
So would you want to do this one?
Not at all.
Okay, what about this one?
£19.
This one?
That's fluctuating fast.
Yeah,
Pound that way.
yeah, so about roughly how much? Give me an average.
It's 80 something pound.
Okay, yeah, about
70
70 pound.
pound.
Yeah, but it's moving really fast though. Okay, now, so thank you very much for that. Let me get, right, Anthony, yeah. Um, okay, so Anthony, we're talking about PIP, right? What, what,
Yeah,
what's your understanding of the word PIP?
Pip,
Yeah.
we are talking about the movement of the market, the rate at which the movement moves and the cost you pay the broker.
Okay. So if the market moved from here to there, how many pip the market would have moved then? From this one
From
here
where?
up to there.
From 91 to 90,
Two.
91 to 92, that will be 1 pip.
One pip, okay? No, so that's
Yeah,
what we mean by pip. Now, let me give another example now. So we've got Tesco share price, right? So let's have a look at Tesco now. Okay. So if we then look at Tesco. Okay. So this is Tesco share price, right?
yeah,
Okay. So if I then okay, so this is our Tesco share price, right? Now, if Tesco, if we bought Tesco, right, at, yeah, and let's see what I'm gonna do because £2 and 5 pence, right? But when I sort of buy Tesco, it's £2 and £2 and 5 pence. Sorry, it's let me change it slightly because Tesco is £2, right? And 5 pence.
yeah,
Okay. Now every point Tesco move, right? If Tesco moved to 2.06, Tesco would have moved 1 point. If Tesco
yeah,
then moved to 2.07, then it would have moved
2 points.
I'm sorry, 2 points, yeah? So if I
Yeah,
bet £100, now let's take one of the trades that I'm currently in. Um, see. Okay. Okay, so I'm into this trade at the moment. Let's take one of the trades I'm currently in. Okay, so I'm into this trade here, right? I'm into forward, but let's look at this now. So I am doing £1.50 per point. Okay, that's my opening price. That's the latest of the market, and that's my stop loss. That's my limit. That's where I'm expecting the market to go to. Okay. Now, so this is where it is now. So I enter the market there based on the trading strategy, right? That's where the market is now, right? Okay. That was where I put my stop loss. So if the market then moved from here, come all the way down to there, then I'm stopped out, and that's a losing trade. Whether the market is going in the right direction, I'm doing £1 50 for every movement the market moves. Okay. Now, if I was doing, let's go back to it now. So look at this now. So I'm just gonna copy this one onto this so you can see what I'm talking about, because I want you to understand the whole concept of this thing. Okay, now. Okay, so if I have, right, so this one is it's an energy company in the UK. Okay. Now, so I got into this trade at 1, 2. Let's do it the other way around, see it makes sense. So I got into this trade at this is where the market is. The market is at 1, 2, 8, 7, right? And I'm gonna take away, right, 1, 2, 5, 1. So how many pip is that?
36.
36 pip. So that is actually the market has moved 36 points since I've got into this trade, right? Because that's where I entered the trade. That's where the market is now. Okay. Now what I'm gonna do now, for every point this market moves, I've times it now by 1.5. So every point it moves, right, I am going to get £1.50. So let's see if it's the same. So if you notice, this is £54 and this is £54. Make sense?
Yes.
Okay, so let's look at a trade that is not in the direction I want it to be. Okay. Okay, so this one now is okay. Now I'm down without even me remembering how much money I'm down. So this is where I enter into the trade. This is where the market is at the moment. Okay. So I'm going to now do 1, 0, and remember it's a full point. These are like a fraction of a point where you have the 0.9. But in the forex market, it's the 4 decimal places depending on the platform we're using. Now our platform that we'll be using, it's after decimal points, the next 4 numbers. So we'll come back to this now to show you again in terms of what I'm talking about when I say points, because I think probably this would be easier for you to understand it. So the market at the moment is 1084, right? Minus 1093. That's where I enter. So if you notice there, I'm -9. Okay? So because I'm -9 and I'm doing £1 for every movement, how much money am I going to be down?
£9.
£9. Let's look back at the account now. I am down £9. But just remember these I didn't use the end numbers, yeah? Which that's the reason, yeah? Okay. So that's the thing. I'm down £9. Okay. So that's the way this thing works. So it's understanding the pip, understanding the spread, and understanding the movement. Okay. So understanding the pip, understand the movement, and so on. So that's what we mean. Okay. So for this one now, this is how we could look at it now. So we'll talk about this bit here. So right click on the chart. We'll go to spread, and then that will tell you now any of those markets that you have selected, if you see any of them with anything over, I would say over, because most of you are more, more swing traders, meaning you will hold trades over a period of time. Yeah, if you see anything over 6, I would say you probably want to avoid really. Yeah,
Okay.
because you don't want the spread to be too big, because it will eat into a lot of your money before you even get into the trade. And also as well, we want liquid market. A lot of these markets where you see a spread of 90, 97 and so on, these markets aren't that liquid. If you notice, look at this country. It's a Euro and South African rand. There's, even though South Africa has got a lot of trading partners, it's not as much as, for example, like even look at this one here, like the pound versus Singapore. Singapore is have a lot more trading partners and do a lot more businesses than, say, for example, South Africa. Okay. Now, so basically, what we've got now is this. So we've got the spread. We've got the we already. What did I say the ask was again? Let's go back up to CAD so you can look at CAD. So if you look at the CAD there, so we've got the bid and the ask, right? So remember the bid and so if we've got now, if you look at this now, where we've got that's the sell and that's the buy. Okay, so let me just check. Ahmad.
Yes,
Which one again is the bid?
the bid is the sell and the ask is the buy.
Excellent, well done, excellent. Okay, so that's what we've got there. So once you see these bid and these ask, you just sell and buy, yeah. Okay, and also as well, this bit here, it's telling you the spread as well. So if you look, this is 27.8, that is 28.9. So if we take away these two from each other, so it's 1 pip and roughly a difference of 1 point, so it's 1 pip difference, to be like 1.4. In this case, 1.2. Okay, if you notice 1.2 there, so that's a spread, 1.3. Yeah, can you see 1.3? Yeah, so 127 from 28. Yeah, so you divide. Yes, excellent there. You divide by 10 to get the spread. See, to find the spread, we divide by 10, and also to count now. The next bit now, Petra, this is what we've got now. So if I'm gonna make this a bit bigger now so you can see now. Okay, now I want to see how much pip this candle made in one day. What is the pip size of this candle? Okay, so this candle then open there, closes there, right? Because remember the open, the close, the high, the low. If I want to see from the open to the close, it's just that. However, if I want to see how much pip this market move in one day, start from there, or how much pip this candle is worth to the top, that is 100 pips, because we just divide. And let me tell you, let me see, let me just I won't be able to screenshot it. Right, let me see now. If I control, let me see. Say if I let's see if I can. Okay, if I then show you this, guys, there are three numbers, right? There's one for 0. There's one, you've got 0, then you've got 1003. Yeah, then you've got 1.27156. Well, that's just the price, where the price is, yeah. But the bit, yeah, that I want you to look at is the pip, the one in the middle. That's 100 pip movement. Okay. Now, if we look at this one here, this one up to this point here, that's 161 pip movement. So we divide the middle one by 10. All we've got to do yet again, just divide it by 10. And use a calculator if you want to. Okay? So we divide it by 10. All right? Let's look at another pip movement there. Okay, let me sort of move it to the side so people can see where I'm going. So I'm going from here all the way up to there. So that's 187 pip. Okay, right. Let me see. Jessica. Jessica.
Hello? Hi.
Okay, now one of the questions was asked, right? Why do we need to know the pip movement? Now, why do you think, right? Now, let me tell us something here. Say we get a signal from, we got one of the things I'm going to be teaching you about is like we got an engulfing candle. which is what I'm going to talk to you after this. Now, if we get an engulfing candle, right? And if I look at this engulfing candle is less than 75 pip, then it wasn't a significant move in the day. So I wouldn't take the trade if this candle, yeah, which I'm going to talk to you shortly about, right, wasn't there was if the market or the candle, if the candle this didn't move, right, this engulfing candle here didn't move more than 75 pip, then I wouldn't have said it's a major move. Okay, so that's the reason why we need to know, but also need to know how much money we're risking per trade. Now, if for us to trade this thing and we're using this candle as our stop loss, and this is how much risk we're going to take, then 119 pip would be, right, 119 pounds of risk will be taken. So we need to understand, right, yeah, these moves. And a major move is when we've got the market moving more than 75 pips, okay? And that's what I consider. Some people might say 100 pips, but for me, I would say a good move in the day on a candle, right, to show buyers and sellers is if the market either move up 75 or move down 75. Okay. Now, what I'm gonna say now, Petra, this not no, Jessica. So Jessica, what I needed to do for me, I needed to tell me how much pip this market move, this candle move for the day.
160 pips.
160. Yeah, excellent. And let's do another one. How much pip did this one move?
190.
Excellent. And then this one here. Yeah.
98 pips.
Excellent. Brilliant. Okay, guys. So that's me done on that one. So if we go back to the lesson now. Okay. Right. Okay. So we look at the pip. We look at the point. Now today, we're looking at the identify bullish and bearish engulfing candles. Okay. And we're looking at finding these at the zones. So where we've got our supply and demand zones, and then what you're going to do for me, you will identify all of the engulfing candles at the different zone for the last 2 years, and you're going to state whether the trade would be a winner or a loser for that candle for at least 3 days. So please provide a tally with your homework. Okay, so that's what I'm going to be teaching you now. So what you're doing now, you're doing what we call back testing. You're seeing, right, how the market moves when we've got an engulfing candle. So let's talk about now the engulfing candle, okay? Now, an engulfing candle is a candle that engulfs the body. We're not really looking at the wicks. That's the wicks. Now look, this is an engulfing candle because it engulfs the body of this candle. Okay, so this candle here, this one is and this is what we call a bullish engulfing candle. Why? Because it engulfs that one. So remember, the engulfing candle as always has got to be on the right. In this case, this one is a bullish engulfing candle. Okay, now let's see if we can find a bearish engulfing candle. Okay, let's look at this one now. So this one here. Okay, so this is what we've got now. We've got this one here, this one here. This one is a bearish engulfing candle because it engulfs the body of this candle. Okay, this one, the red one to the right, engulfs the body of this candle. Okay, let's find another one. This one here. Okay, and that one there. And let me just put a vertical line because this is what you're gonna do for me. So we've got an engulfing bullish. We've got an engulfing there. We've got an engulfing there. We've got an engulfing there because it's engulf the body of this one. This is, you know, very close to it to each other there. Okay, we've got an engulfing there. But this one is a bullish engulfing because it's a green bar. It's an up day. So the market went up. Bullish engulfing. This one here, we could almost consider this one as a, let me see, what's the line like? Because what we want to see is, you know, that basically, no, nobody decide, you know, this one engulfs that one and it goes up. So therefore, people are buying and the market is moving up. Okay, so whenever, if you notice, you're gonna see what happens, right? Because for today, it's not about what the bullish and engulfing candle does. I want you to do a research for me and then come back and then tell me about it. But we're gonna be specific on how we go about finding these bullish and engulfing candles. Now, we've got a bullish one here. We've got another bullish engulfing there. We've got a bearish engulfing there because it engulfs that one. We've got a bearish engulfing there. We've got a bearish engulfing there. We've got a bearish engulfing there. We've got a bullish engulfing there. We've got a bearish engulfing there. We've got a bullish engulfing there. Is this engulf? Well, you know, we've got a bearish engulfing there. 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 We've got a bullish engulfing there. We've got a bearish engulfing there. We've got a bearish engulfing there. We've got a bullish engulfing there. We've got a bearish engulfing there. Okay. Okay. We've got a bearish engulfing there. We've got a bearish engulfing there. Got a bullish engulfing there. Okay. Now, so let's have a look at what we're going to do now. Okay. So, okay. These are all of these candles now. So, if I just make this a bit smaller. Okay. Right. So, let's see. Have I asked Mel a question already? Patrick, yeah. Petra. Hello, Petra. Right. I'm
Hello.
going. Yeah. Good evening. I'm gonna basically be touching these, right? And I just want you to tell me whether it's bullish or it's bearish. Okay.
Okay,
So just look where the mouse is. Yeah.
that's bearish, bullish, bearish, 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 bullish. Um, they look the same.
But remember, this one is the candle went down. It's went all the way up to there, and then went down to the mark.
Okay, so
But then it also engulfed this candle, a candle before.
that's a engulfing bearish,
Yeah.
bullish,
Yeah.
bearish, 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 bullish, 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 Bearish. I can't see anymore. Can't see where you.
Yeah, okay. This
Oh,
one here.
sorry. I need to check my. Sorry. Okay. Yep, I can see now. Bearish. Bullish. Bearish.
Okay, now if we said bearish, what do we mean? If we said
Okay.
use the
So
word bearish, what do we mean?
well, the word bearish comes from bear, who
Yeah.
strikes downwards with its
Okay.
paw,
Yeah, okay.
pushing prices down, which is called a downtrend.
Okay. And bullish?
Bullish
Yeah.
comes from bull,
Yeah.
strikes upwards with its
Yeah.
horns, thus pushing the prices higher. A
Okay.
bull market is when an asset price is rising, called
Okay.
an uptrend.
Okay. Brilliant. Excellent. Excellent. So this is going to be the next step now. Okay. So let's just set your homework up now. How are we going to do this now? Let's see which of the markets I've got here. I see.
Oh, by the way, I
Yeah.
was actually researching. I was actually researching what bullish and bearish candles mean.
Yeah.
So that's why it sounds like I'm reading it, because I wrote them down last week.
Okay. Okay. Yeah. Yeah. That's fine. So what we've got. Oh, sugar. You see? Do you see why? What? By the way, did anybody see what just happened? Did anybody see what happened just now? Because I've actually placed a trade.
On the wrong one?
Your demo.
On the live? On your
No, no, no,
live?
no, no,
Oh my
no, not
God.
on my live one, but I've placed a
Okay.
trade because I've turned on one click trading. So if you've got one click trading, then you know it can be dangerous. So because you might just click the wrong button. Okay, but anyway, Euro GBP. Okay, guys, so this is what we've got now. So what we're gonna do here now. I'm now gonna show you. We're gonna look at for the last 2 years. Okay. So we're 2017 now. Are we 2017 or 2018? We're 2017, yeah? So if we look at the calendar, right? And what I need is I needed to go back to, okay. So so last year 17, then we're gonna go to is it 15? Okay, they're about 3 years because I'm giving you're getting a week to do this. So if we go back to, I would say, what month are we in? We're in March, all right? So if we go to March, if we go to 2015, let's do 2015. Okay, so we're gonna do from 2015 to March, the 28th of March, right? Okay, and we're gonna do a research from the 28th of March, 2015. So we're gonna go to 2015, okay? So March 2015. Okay, so March 2015, and then this is gonna give me the date now, which is 2015. Okay, so that's where we're gonna start from now. If this candle, right, and remember as well, what we're gonna do is, if we look at this, the movement of the candle, and if it's less than, 75 pip, then we're not gonna consider it a bullish or a bearish candle. Okay, we're not gonna highlight that one. Okay. Now let's find for me. Let me see who haven't given who haven't had a go yet. Who haven't had a go? Oh yeah. Taliba, you haven't had a go yet. I'm going to give you access to type on my computer now, and we're going to go from left to right, and we're going to be searching for these bullish and bearish candles. Okay. Okay, so we're gonna start from there. Okay, so we're gonna start. We're starting. Okay, the 26. That's the 26 there. So that's our first. That's our first bearish candle. So we're gonna basically go. We're gonna check the height of this candle. Let me just move this over a bit. But for now, that's not what you're gonna do. You're gonna have to do that another time. But we're just gonna look. Okay, so this move from there to there. That's fine. That's fine. So this is our first. Okay, that's our first. Okay, that's our first bearish. Okay. No, it occurs. We want these candles to occur at the supply and demand zone. Now, the fact that this market was going up, this would almost be like a supply zone, because at supply zone, the resistance level, the market will go back down. Okay. Now, also, right, if what we're gonna check, we're gonna say, so we're gonna have the tally now. So we're gonna have a tally. We're gonna have. Let me just put this. So in our tally table now, we're gonna have win. Okay. And then we're gonna have loss, right? Okay, so win and loss, right? Okay, now for the next 1, 2, 3 candles, because we would have entered below this candle, then we're gonna look and say 1, 2, 3. If this candle for this engulfing, right? 1, 2, 3 for the next 3 candles, if it's lower than where would enter, if it's lower than the bottom of this candle, then we're gonna say that's a winner. Okay, and then we're gonna put a tally. But remember, you're doing this for your markets, the markets that you're researching. Okay, the markets that those 6 markets that you will be looking at, that you will be making acquaintance with, you're learning about them. Okay, and you're seeing how the engulfing candle interacts with these zones, and then you're then going to tell me your findings in your homework. Okay, because I don't want to tell you, I want you to tell me. Because I think if you go away, you research it, and you follow through what I'm asking you to do now, then it's going to be far more rewarding than me telling you about these engulfing candles. But remember, as I said, the engulfing candles, we want them to be at least 70, okay? At least 75 pips, okay? So there's no engulfing there, no engulfing there, no engulfing there, no engulfing there, no engulfing there. Okay, there's an engulfing. Now, right, Taliba, hello? Taliba, hello? Okay, right. Now, at this point here, right, this is an engulfing, okay? So, and it is at demand zone, because the market moves down to this zone, okay? And we get an engulfing candle there. So we're gonna take the trade. So that one, we're gonna put it on the win side, okay? Let's look now. Going again. So because 1, 2, 3 for the next 3 candle, it's higher. Now, this one here is an engulfing, but because the market is going up, this would be a supply zone. And we wouldn't want an engulfing candle, wouldn't trade an engulfing candle at supply zone. We only trade engulfing at demand zone. The market would have to come down to this zone here for us to be in it. Okay, so let's go again. So we're looking again. Yeah. This one here engulfs the little tiny body of that one. Okay. So basically, this one would be an engulfing, but it's a bearish engulfing. We don't want bearish engulfing at demand zone. We want bearish at supply zone. But anyway, this one now, it's a massive one. And let me tell you what sort of pip we'll be looking at here now. This movement here is 165 pip. Now, I wouldn't recommend that you take any trade this big unless you've got a good account size, or you're gonna do like 50 because if you did 50 pence per pip, if you do, and this is 172 pips, yeah, let's not talk about that now. Let's leave that for now. Let's take it anyway. let's take it and say, okay, right. So if we took this one because it's at supply and demand zone, right? This one here engulfs that one, but look, 1, 2, 3, it's not higher than that one, so we're gonna put it on the loss. Okay, so that's the loss, right? Then let's go again. This one here, okay, engulfs the body of this one, but let's see what sort of pip movement for the day. That was only 40 something, so we're not gonna do that one. Okay, this one engulfs that body there at the demand zone. So let's see what sort of pip movement for the day. 88, that's fine. So we're going to take the trade on this one. So that's an engulfing at demand. And then what I'm also going to teach is about the pin bar, which we'll be doing next lesson. But so this is a winner, okay? So we went up. This one, the market went up. So this one possibly would have been, right, let me see what sort of engulfing. Does it engulf it, the body of it? Roughly, let's take this one, okay. So that one, but then because the market moved up, we could have taken this one, because this now would be a supply zone, a resistance level, because the resistance there, you could be looking to take the trade there. Okay, so this one is a loss. Okay, now it's up. This one here, market breaks up, pull back, but because I've been taking this zone here, a supply zone, because it's within this zone here, now the market moves off. I wouldn't take this trade. Yeah, but this one here is an engulfing at this zone, so I'll be looking to take this one here. Okay, but also remember we said we don't want anything over, it has to be over 75. So 1, 2, 3. This one is a loser because well, after 3 candles it breaks up and move above. Where this is would have where if it comes and go above it, I am saying that it's going to go down, but it comes and goes above here, so therefore that's going to be a loss, right? Okay, let's go again. So the market is moving up. Okay, then I got an engulfing there, but because this now is my supply zone there, then I'm looking for an engulfing to take the market down. So I wouldn't take this one. Okay. Right now I've already done that part. Okay. This one here would have been, well, because the market is coming down to these zones. Now here, the market moved down to here. This is an engulfing. So I would have taken this one. Okay. Now 1, 2, 3. That one lost, right? So I'm going to put that there. Okay. Then we look again. The market then breaks down to the next zone. Okay. Then I'm looking here now. That's 25. That's nothing there. Nothing there. Yeah, this is nothing there. Nothing there. Market. Nothing there. Nothing. This one engulfs the body of this one. So we're looking. Let's see what sort of pip movement on this candle. That's 107 pips. So that's a really massive. Which one was I looking? Which one was I looking at again? I think. Oh yeah, here. Okay. That's a good size movement there. So I would have taken this one. On the fact that we had a really massive rejection there. 1, 2, 3. That's a loser. Okay. Right. So we're doing our tally. So guys, that's what you're gonna do for homework at the supply and demand zones for the 6 markets, and you're gonna tell me what the outcomes are. Now, so what we've looked at today, we've identified the bullish and bearish engulfing candles. You'll be looking at marking all the engulfing candles at the supply and demand zones for your chosen markets. And your homework now will be, you will identify all the engulfing candles at the zones, and it won't be for the last 2 years, guys. It's gonna be for and then you're gonna look at the candle for the next 3 days. If you're looking for engulfing, right, bullish engulfing, right, and it goes up, right, then the next 3 candles, if it's higher, then we're gonna call it a winner. Now remember, guys, that this chart that I was using was a chart done by one of my students. Okay, so the chart that you have done, if you could probably go back again and probably redraw the charts, redraw the lines and your supply and demand zones on your chart, and then do this calculation for me. And then you can then say to me, Marlon, do you know, right? I've done the analysis for the last 3 years, right? And it came up with for all the bullish candles I took, right, on the Euro GBP, there are about 90 trades based on my supply and demand zones. And there are approximately 90 trades, right? And out of the 90 trades, 60 were winners and 30 were losers. Or it could be, 70 were losers and 20 were winners. And you might be thinking, you know what, let's make a note of that in my trading plan to say that the bullish engulfing doesn't work with Euro GBP. Yeah. So you are now collecting your what we call empirical data, right, to inform decisions in the future. However, there's not just the bullish and engulfing that we're talking about here. It's an understanding of what is happening, and for you to get some clarity and confirmation of this bullish and bearish engulfing candles. Okay, because the bullish and bearish candles, they are probably the most powerful candles of all the candlesticks out there, because there are lots. The next one that we're going to be looking at, not Wednesday, this Wednesday coming, but the following Wednesday, we're going to be looking at pin bars. Now you've got a whole week and a half to get this done. So remember, I said it's next week Saturday. I'll stay up. I'll get everything marked ready. So if you could get that done for me, and of good quality and standard, I'll be really, really appreciative. And especially if I needed to get it to the next level. And also, guys, for the people who are paying, for the people who pay in the 2 installments, remember the next payment is now due. So if we could make those payments, that would be brilliant. Now, anyway, guys, I've got another session to go to. So what I'm going to say now is I am expecting everyone, Jack and Jill, homework. Okay? I'm expecting everybody's homework. Because, guys, let me tell you something here, right? Nothing beats me when I look and I see, right? And I look and I see that, I'm, looking forward to the homework to mark it and then not being able to get the homework. Yeah. So can people just really give me that buzz? Because the first 2 sessions, I just had a buzz. I'm like, yeah, man, these students are gonna make some big bag of money, man, and everybody's gonna hear about my students and and how much they're succeeding. Now, if you're not with this thing, you'll pay your money and you'll end up stopping, because that's typical of people who goes into trading. They pay for the course and end up leaving the course. So can you, for me, right? Yeah, just don't let the work pile up on you, and everything that you've got to do now, get it done. And I'm on holiday now, so if you could then, for me, right, just get that done for me, then I'll be able to help you to catch up now. So just send them through. I'll mark them now, right? And for the next piece of homework, just get it done for next week, Friday. Yeah, because if you let this thing get on top of you, you will feel overwhelmed and think, I've paid my money and I've given up. And I don't want that. I've got a student, I literally had to chase him all the time, literally chasing him. And I'm like, you have paid me all this money for the course, and even if I'm taking a pound from you, I still need that interest. I still need you to show that desire, because everything that you do in life is about a burning desire. So I was really disappointed that I only had a few pieces of homework this week. So guys, can you really give me some? I need some inspiration as well. Can you give me some, please? Okay. So for all those people who didn't send me through their homework, can you send it through for me? I don't want to hear that you've scribbled it on paper, you've done this. I want it type, send it through to me. Copy and paste. I'll show you to print screen. Okay. Also, next week, Friday, I don't want any excuses whatsoever. Even if you're going on holiday, I need you to get it done. Take your laptops with you and get it done when you've got some free time. Okay, guys, I've run over into the other session, so I'll speak to you soon. God bless and good luck with everything, and have a great and a safe holiday.
You too. Bye.
Bye bye. Bye.